right, thank you everybody for sticking around. We're going to have a fun panel here. Gives a great opportunity for you all to ask some questions of our nice panelists. Actually, why don't you guys come on stage? So while they're coming on stage, the session title for our panel to finish out the day is probably the best way to do it. It's called Moral Hazards and Ethical Considerations in Cyber Insurance. Now, we're all in information security, so our job is to be paranoid, cynical, question everything. So this is your opportunity. So these are the questions that I hear about, that I ask people in these in their respective roles all the time and how they look at it. First thing I suppose we should do is do some brief introductions. So maybe Lindsay, you can lead it off.
My name is Lindsay Nickle, and I am a vice chair of the cybersecurity and data privacy team at Constangy Brooks Smith & Profit. I am a lawyer, and to borrow a couple of the terms that have been tossed around earlier today, I am specifically a breach coach. So I am a specialized attorney that helps clients with responding to cybersecurity and privacy incidents.
Yeah, I'm Scott Stransky. I'm with the Marsh McLennan Cyber Risk Intelligence Center. Marsh McLennan is a broker, so we help companies, perhaps like yourselves, acquire cyber insurance from the carriers. My role is to quantify cyber risk, so anything to do with numbers, modeling, data, analysis, et cetera. And I also tell cyber insurance jokes. So I'll give you one right now to start it off, since, I don't know, maybe people want to sleep. I don't want you to sleep, so I'll tell you a joke. What is the similarity between a dentist and a hacker? They both know how to get root access. They're all really bad. I have a lot of really bad jokes.
Thanks, Scott. Go ahead, Tiago.
I'm Tiago. I'm the VP of Research at Coalition. Coalition is an MGA. We're a cyber insurance provider. I came to Coalition after they acquired my company called Binary Edge that does large-scale data collection and internet scanning.
Hi, my name is Jeffrey Smith. I am an intermediary. Kind of, I guess you can call me a broker's broker. What we do is we work with smaller insurance agents in the SME space. They don't have in-house cyber broking expertise, so we handle that for them. They outsource that business to us, and we also working on some new products, one of which I was hoping to get some input on. We're considering putting a product together that actually provides a personal liability protection for CISOs and others in the security area who are concerned that their company's not going to stand by them, or their insurance is exhausted due to an event. So there it is.
Fantastic. Thank you all for being here. Obviously, you have some fantastic experts. So since the word cyber insurance was introduced to InfoSec, the very first question that ever got asked is, in the event of breach, do you guys pay out? Are they really going to pay out? So I don't know who wants to take that one first, but do carriers pay claims?
So I'll take it. I'm not an insurance company. I'm not an insurer, but I have handled thousands of breaches over the last 10 plus years that I've been working in this role as a breach coach. So I've worked with dozens and dozens of different insurance companies, and the short answer to the question is yes, the insurance companies do pay for the claims. It is a first-party product, and it actually works to the great benefit of the insured companies. There's not just the expertise that they bring to the table with legal and providers, and to draw on one of the questions asked earlier, like if we need to pay a ransom, how do we go get Bitcoin? We've got people for that. All of that is put together, and they do pay the claims. We're seeing a few more deep inquiries into some of the language with some of the things that have been happening in recent years. But still, fundamentally, I think as a group, cyber insurance carriers are very proactive on behalf of their insureds and very responsive.
Yeah, I mean, as a broker, we get to see all the claims from our clients. So if you're a client of Marsh, you would come to us when you have an issue. We would notify your insurance carriers on your behalf. Notifying them doesn't actually mean you have a loss yet. And then assuming you do have a loss, then we actually help you get that claim done. And the reason I know this is because I work with all the data. And one of our key data sets is our claims data. So if claims weren't paid out, we wouldn't have any data to work with for all of our modeling and data analysis. So we have thousands of claims across our clients. And that is really how, from an insurance carrier's perspective, they get all this data. They pay for that data by paying out the claims. So in some ways, it's quite good. They want to pay out the claims because they're learning from the claims. They don't want you to have an insurance product where you feel like you're not getting value from it. So yes, of course, the carriers want to pay out any valid claim.
You're free to answer, but from your perspective, can you quantify it? Like what percentage are denied versus paid?
Yeah, the only claims that I've ever seen denied were based on the amoral actions completing the insurance application by an insured. We have MFA, but then they find out they don't, or we took care of the RDP and then they open it right back up. So, in the event that the insured breaches a warranty that was made in the application process, outside of that, I've not seen claims disputed.
Go ahead.
I have been at Collision now for 5 years, and I can say that in 5 years I've seen claims be denied 3 times. One was claims fraud. The company had just been ransomed, and then they tried signing up for cyber insurance with us. That's fraud, because we asked the question, do you know if you had any events that would have led to a claim? The other 2 was because the customers gave us bluntly wrong information on purpose. As Jeffrey mentioned, MFA, they said, yes, they had it enforced on email, and actually they didn't. And we see that situation happen more times, but again, our incident response team goes in, and we will look at all the evidence, and it's okay sometimes for customers to, maybe they answered that question wrong, but some cases we can see it's bluntly obvious that they knew they didn't have MFA. So yeah, claims do definitely get paid.
And I will just add to that you have to meet the terms and conditions of your insurance agreement. So for example, if you have a business interruption, which is absolutely covered by cyber insurance, most business interruption policies have a waiting period, whether it's 8 hours or 12 hours or however many hours. So you think, oh, I'm down for 3 hours. Why didn't my cyber insurance pay out? Well, it wasn't actually a covered event. It actually has to meet the criteria. Just like if you have a car insurance policy, you probably have a deductible. So if you have a little chip in your car, you're probably not going to get an insurance payout for that. Cyber insurance works the same. So when companies think, oh, we had some issue and it wasn't paid out, you have to go back and look at the terms and conditions and try to understand what was going on.
I would just like to add one thing to that, which is the work starts internally. Try to understand your risk and what you want to protect against, and then go work with your broker. For example, you're looking to protect yourself against cloud outage. Maybe a normal cyber insurance policy isn't the right thing for you, but a parametric one would be the right choice for you. So start internally, do your own threat modeling, your own analysis, then go talk to your broker, and your broker is your best friend. They'll find a way to help you.
I would add to that expectations can be a problem, and that's one of the reasons I think any insurance policy where the insurance industry gets a bad rap is that there's actually expectations built between the agents and their insured, particularly with respect to what we call time element claim or business interruption claims. You'll have a BI claim, you could have business interruption claim with cyber, and the problem is they'll get looking at the formula. It's a calculation of what the profits that you lost out on during a time of a shutdown, and you'll get all sort of accountants in there thinking, hey, we were actually supposed to do this much, and then they get expectations they're going to get paid out this much, and we have to ratchet back those expectations. So that can cause friction in the claims process. So creating expectations with respect to claims processes is important.
And actually, one of the other things we saw, we were talking to a carrier that writes a lot of small business risk, like literally mom and pop shops, the hairdresser down the street or the little convenience store. And they write a lot of what they call package cyber insurance, where they're packaging a cyber insurance policy with a lot of other things. So this hairdresser is going to buy insurance, they're buying liability insurance, they're buying all sorts of different types of insurance, and cyber's in there. And a lot of these places don't even know they have cyber insurance, so that's why they don't end up claiming on it. Maybe the hairdresser's little payment system gets hacked and they lose some records or things. That actually could be a covered event. They don't even realize they have cyber insurance. So again, it's important to talk to your insurance carrier, your broker, the people who are writing these policies to understand what you're even covered for. You may have cyber insurance, a small amount perhaps, and not even realize it.
All right, the next one, the next big one that I've been hearing over and over again for years. If cyber insurance exists as a fundamental concept, the business will decide not to do security controls, not do security, because they'll say, we're insured, we don't need to. If something bad happens, they'll pay out, causing the moral hazard. People will do worse for security than they otherwise would have?
The idea is not to have a claim. You know, that's the idea. Insurance is the last part of the puzzle. You do everything. I think somebody was talking about the risk management process before, but you basically assess your exposure. If you can put a number on it, you put a number on it, decide how much you want to keep, and then you lay off the rest. But insurance is the last thing you do. And you know, if you want to shortchange your investments in security, we can still get you an insurance policy. But if you have a claim, you're going to be expected to make those improvements to get another policy.
Yeah, I mean, there's so many things I could say about this. First of all, today's cyber insurance limits are not necessarily going to be enough to cover every single issue that could happen. We're trying to build out the market, expand coverage, increase limits and things, but still you're probably not going to get sufficient coverage for the very worst event that could happen to your company. So it's like, oh, I have cyber insurance, therefore I don't need to worry. Well, even if you have an issue, it may not be fully covered by the limits you've purchased. That's the first thing. But the second thing is cyber insurance can actually help, first of all, incentivize you to do better things, because you'll get cheaper and cheaper cyber insurance as you improve your cyber controls. But it can also come with a lot of benefits in case you actually do have an incident. So for example, it comes with breach coaches, it comes with panels, incident response, all the different things that you, if you didn't have cyber insurance, would have to go out and license separately from lots of different vendors. That's one of the advantages of having a cyber insurance policy. You get all of that. So when you have an issue, you'll have all of those things included. There's so many other things, and I'll let the others chime in. I'm happy to add more after.
Yeah, I mean, I've talked about this during my presentation, right? Even applying for a policy, there's going to be minimum set of security controls you're going to need to have in place to be considered for a policy. MFA, don't have MFA enforced on email, good luck getting a policy today. If you're working with a cyber insurance provider that is data-driven, that does scans and all that, good luck getting a policy if you have RDP on the internet or an unpatched Sonic Wall, Fortinet, Citrix, pick your poison. It just doesn't work like that. So cybersecurity is critical, invest in cybersecurity, and then insurance comes on top of that.
Yeah, I mean, you don't want to have a breach. Even if you have full coverage that's going to cover all your financial losses, it's somewhat embarrassing to have to be in the news and say, oh, this company was breached. Yeah, they're made whole with their finances, but still you get that publicity in a way you don't want. So
Well, that's if you have a good breach coach, you don't.
well, fair enough.
Just saying.
Yeah, but the idea is not to have the breach in the first place. Yeah, cybersecurity helps. Cybersecurity insurance helps. This all helps, but it's not sufficient. You need a little of everything.
I'll just add one more thing to that. When my colleagues say you don't want to have a claim, trust me, you really, really don't. As the person that's on the phone with our claims team and our incident response team with the policyholders, hearing someone on the phone crying, I need to pay salaries tomorrow and I can't because all the money on our bank account has been stolen. Trust me, it is not a situation you want your company to go through. It is not great for us. It's not great for the policyholder. It's not great for anyone. So investing in cybersecurity and insurance, both of them, is the right path.
And I'm a numbers guy. There's a statistic floating around on the internet that's not true, but a lot of people quote it. And they say that companies that have a cyber incident, if they're a small business, like 6 out of 10 of them go out of business within the next year. It's a fake statistic, absolutely untrue. But in some ways, I like sharing that because it scares people. And people do need to be scared about cyber because it does happen to a lot of companies and it causes a lot of financial loss.
I would probably say to that, that is a false statistic, but more so
yeah.
if you have cyber insurance, you have not just the financial availability of that policy, but also the resources that the policy brings. And so insured companies are much less likely to go out of business. And I've lost count of the number of clients I've had and breaches I've handled. It's somewhere in the couple thousand at this point. And I've never had one go out of business. It's my job to keep that from happening. And it's my job to work with the insurance policy to leverage all of the resources to keep that from happening. So yeah, that's the opposite of that is true.
No, speaking of these fake statistics, actually it's a lot of fun. If you really want to go down a rabbit hole, Google this statistic. You'll find a lot of sources that quote it. And then you could see references to previous sources. Eventually get into an infinite loop. Like one person's quoting somebody else who quotes that first person. But you can never find an initial actual data source for it because it doesn't exist.
Yeah, no.
Excellent. Just so you know, if you have questions as we go on, please step up to the mic, raise your hand, I'll try to spot you. They're here for you. So let me ask the next one. When you apply for cyber insurance, you have to, often enough, you have to fill out a questionnaire, okay? In your experience, customers want to get the best rates possible and the best coverages possible. In your experience, how closely do the answers to the questionnaire match their security environment at the time where it's most necessary, like say during a breach?
We actually, my team did a study on this just a little over 2 months ago. And what we found was actually, it changes question by question. So I'll talk, for example, about MFA. We actually found that around 80% of the answers were wrong, where customers would say they had MFA enforced, and they actually meant active, meaning there are a few select accounts on the company that did not have MFA enforced, but that makes a whole difference. So like for MFA specifically, we found like an 80% error rate on response.
From what you can tell, are they purposely being misleading,
No.
or are they just making a mistake?
Absolutely a mistake, not purposely misleading. People sometimes don't even understand the difference between active and enforced. So we, from our perspective, did not feel it was malicious at all.
80%, that's kind of freaking me out.
It was really, really high. And by the way, these are things where we're certain. So essentially, we developed this new feature where customers can plug their Office 365 and Gmail accounts, and we get to see the security configuration enforced on those accounts. So we get to essentially cross application data with data from the integrations, and that's how we got to that number.
Mm-hmm.
So we've actually done some studies. We have a self-assessment questionnaire. If anybody here is a Marsh client, I'm sure you've struggled to fill out that questionnaire. It's a lot of questions. But we've actually compared some of the answers in those questions to outside-in scans from some of the vendors that I'm sure you're familiar with as well. And interestingly enough, we didn't find very good correlation, or maybe it's not interesting to you, but we didn't find very good correlation between the answers to these questions and like an outside-in scan. So we have questions about patching cadence in our self-assessment. How quickly do you patch CVSS 9.0 and above? How quickly do you patch 7.0 to 8.9? Do you patch within 7 days, 50 days, 100 days, whatever it is? And then we look at like a bit site patching cadence or a security scorecard patching cadence score and try to see is there a correlation there. Turns out there's almost no correlation between the answers to the self-assessment and the outside-in scans. That said, I think it may be more of a thing like we're not asking the same question. When you look at the patching cadence score from these vendors, they're not measuring patching of specific 7.0 to 8.9 within 7 days or whatever our exact question is. They're measuring things they can see from the outside based on user agent strings or based on IP address DNS traffic that they're looking at. So in our view, when we think about building models out of this, it's actually very useful because we're getting two unique and both predictive data sets to use in our modeling. So we found that our self-assessment is highly correlated with cyber insurance claims, and the bit site and security scorecard scores are, I'm not going to say highly correlated, but a little bit correlated with cyber insurance claims. But they're not correlated to each other, so we can add them both into our modeling work. So from our perspective, in some ways, it's almost good that they're not the same, and we can use them both in our model. That said, we don't audit our clients' self-assessment answers. So to your point, like, we have no way to verify. We're not going to go in and spend days with our clients making sure that all 100 questions are answered correctly. But that said, they are signing away the fact that if they have a claim, they're saying that this was truthful at the time that the policy was written. So there is some legal aspect to it in that sense, that they're not going to get the claim paid out if they were knowingly lying.
And I think sometimes that's a function of the wrong person is answering the questions. Mm-hmm. Sometimes you have and we see this even on the claims side of things, when something has happened, we really need to talk to someone in IT, and a lot of times we get the GC. And so we start with the lawyer and the risk manager, and hey, we've put in a claim and we've had a thing, and then we have to bring the right people to the table. If you're not getting the right people answering the questions at the beginning, sometimes the information isn't as accurate as it should be.
Yes, sir.
I've got a quick question. Have you ever had a situation where a claim's been denied because your insured person basically outright misled you based on the security controls they had? You find out, hey, look, there was a breach. We went in, your incident response team did the forensics. They got the ILCs, looked at the reports, and they found out, hey, look, these controls that you said that were allegedly in place were not in place. Like the basics, like Tiago said before, MFA, backups, phishing training, things like that.
For us, as I said, already here on stage, yes, we've had that situation happen.
Right. So when it does happen, and you're basically your clients lied to you, is the claim paid out?
It depends. It depends because essentially it's not just about the forensic analysis, it's putting the context around that forensic analysis. And you sometimes pretty easily to tell if the client lied on purpose or if they lied by mistake. So I would say it's not a binary thing, it depends.
It depends. All right, thank you.
And sometimes the question is also, during that investigation, you discover that they might not have given a correct answer on the questionnaire, but that answer isn't the root cause of the incident. It's something else. And that's where advocacy as a breach coach and monitoring the exchange of information becomes really important. I may learn something early on in a case that makes me think, hey, we could have a coverage problem here, but that's not necessarily information that's relevant yet. And I'm never going to counsel my client to lie about something, but sometimes we need to get a full picture before we disclose information to all the people who need to know it. Yeah, and all my insurance friends did not hear me just say that answer.
Yeah, but, we try to encourage our business partners to get cyber insurance and to be as honest as possible. It's just that, how do we encourage them more?
Yeah.
Keep doing that. That's the right way.
Keep doing that, yes.
Yes, sir.
Hi. Do you feel like the bad actors are adjusting their ransoms to match the coverage of the target?
So I'm going to throw out something here that I've been saying for a couple of years, and not just because I don't particularly enjoy writing blogs. I think some of what the bad actors do is because we've told them it's what we're afraid of. So back in 2016, if we go all the way back there, ransomware was kind of new, and I describe it like a drive-by shooting. Attackers would drive by, they would opportunistically find an open RDP port or something like that. They would drop encryption, ask for 40 grand, and move on. And we all started blogging about, well, what if that's a data breach? What if they looked at data, stole data? And then that's what they started to do. They were like, oh, this is what you're scared of? Watch us. That's what we're going to do. And they started creating the double extortion model, where they would steal the data and hold that for ransom, plus encryption and the shaming sites and all of that. So do they adjust? Yeah, I think they do. I think that they adjust to what they hear us talk about. And they also, I think you find, there was some discussion earlier today about sanctions and whether you can pay a ransom or not pay a ransom, and when you pass an OFAC check, when you say, okay, it is not illegal to pay this threat actor group. There have been a few over the course of the last 10 years that were very, very quickly identified as sanctioned entities. They dissolved really quickly and reappeared as something else. So they do pay attention. They do know. And I think we as an industry have to be really careful talking about what we can and can't handle and what we can and can't respond to, because they will pivot and they will respond to they read our blogs just like we look at them on the dark web.
I'll just add one more thing, sorry, Scott. We actually don't need to try and guess whether they adapt or not. When Conti was hacked, Conti, the threat actor group, and their chat logs leaked, they literally had in the chat logs the playbook for when one of the people in the group pop a company. Here are the strings you need to look for in the inbox to find a copy of the cyber insurance policy. And if you find a copy of the cyber insurance policy, read the limit, and that's how much you need to get paid on the ransom. So
really?
we don't need to guess. We know it happens.
Now, something I'll add to that, I did have a case a couple of years ago where the initial ransom demand was, I mean, not 40 million like we talked about earlier, but it was about 20 million. And my client had 5 million in cyber insurance coverage. And so their response was, well, we can't fix this problem because we don't have enough coverage. And so when we started negotiating, one of the things that the threat actor group did was gave us back a copy of the deck page from the policy. And the deck page was their GL policy, which had 10 million. And so then we had to give the threat actors a coverage lesson. Like, this is not the policy that responds. It's not 10 million. You grabbed the wrong one. And so they do look for that information. But they also gather threat intelligence on how we're responding, just like we gather threat intelligence on them.
So the only thing I'll add is I don't know that the bad actors know who has insurance for cyber and who doesn't have insurance for cyber. They may know in some cases, and I know in some cases they've tried to breach insurance companies to try to get that information. But in general, I'm not positive they know that. And we've done a study recently that we're very excited about. We haven't published it yet, but some of the initial results are quite fascinating to me. What we did is we took our long-term clients who have been with Marsh for decades even, and figured out what date they purchased cyber insurance. They had purchased property or other types of insurance before that, and they're also under $1 billion of revenue companies, so we don't think they have a second broker. If they're a Fortune 500, a huge company, they may have 2 brokers, so we didn't want to mess around, oh, they have cyber from some other broker and property with us. So we took these companies that we think are pure marsh shops over many decades, and here's the date when they purchased cyber insurance. And then we looked at breach data sets. These are not necessarily cyber insurance losses, because before they had cyber insurance, they still could have been breached. And we wanted to look at what is the breach rate before and after that day 0 when they purchased cyber insurance. And what we found for these long-term clients, again, regardless of whether they purchased cyber insurance or not, there was no change in breach frequency on that day that they purchased cyber insurance. And that's looking 5, 10 years on either side of that date of purchase. So that tells me, at least, that the bad actors probably don't know really who has cyber insurance and who doesn't. And if they do, it's not increasing frequency much for those companies compared to other companies.
But it would increase severity, not frequency.
That's for frequency in particular, what we were looking at.
For frequency makes sense.
If I were, knowing what I know now, if I were a hacker, I'd hack MSPs for obvious reasons and cyber insurance companies. There's an old line insurance company called CNA, and they were hacked a couple years ago, and I don't know if I got the story completely straight here, but the demand was like $70 million. And CNA said, you got us confused with somebody who's going to pay that. And they said, well, we happen to know they had, I don't know how many cyber policies they had out. It could be 50,000. I don't know. It wouldn't shock me for 50, 100,000 policies. And they said, well, that's fine. Then we know who your insureds are. We'll just go get them and tell them and hold them up for policy limits. And I think that was part of the leverage they used to get CNA to pay such a big number. And they shut CNA down. CNA works with small agents and who have their rating programs in-house. So they can't file a claim, they couldn't issue a quote, they couldn't deliver a policy, and that was a brilliant hack. As far as hacks go, in my book, that was clever.
So TLDR, if you buy cyber insurance, get a copy of your policies off your inbox, print it, put it on the shelf. Do not have it in a digital format in any way, shape, or form.
Or actually, if you want to trick the bad actors, put a fake policy in there that says like $10,000 limit. That's all you have.
There you go. Yeah.
Send the emails around, oh, we have just a tiny bit of cyber insurance.
Yes, sir.
Lindsay, it's actually more for you. Working in healthcare, I'm CISO of a healthcare organization, and we work very closely with our legal team, particularly for business associate agreements, right? Mm-hmm. So as we're bringing these vendors on, a lot of this, I can't say smaller vendors, but not the huge vendors, GE, Philips, whatever, can't afford unlimited cyber insurance, so they start pushing back, and it takes 6 months, a year at times to negotiate a BAA agreement. Are there any resources that we can use? I try and work with them because of my risk background with legal, but are there any resources that we can do to help them determine what would be an appropriate amount of cyber insurance for our vendors? Because while we have cyber insurance, I'm more worried about my third-party vendors getting breached than I am our organization.
That's a really complex question. I would say go talk to your broker. Your broker should be able to go to, again, any of the modern cyber insurance providers, and they'll give them access to something called the claims calculator, where the broker can input company size, industry, number of employees, maybe domain, and it's going to give you the loss curves. And then it's a decision internally you guys need to make. Yeah, essentially, like, where on this loss curve do we want to sit? And that will tell you the amount of limit that you need to buy.
Yeah, and this is exactly what my team does. We build models to quantify cyber risk, and we run it on behalf of our clients. It helps them understand how much limit they need to buy. It helps them understand if they make this investment to increase this control, maybe they don't need as much limit in the future, or maybe they'll get charged less for cyber insurance. That's literally what my team does. We use a lot of data from historical claims, from the self-assessment questionnaires, from third-party vendors, bring that all together into a model similar to what Tiago was mentioning, but it's an in-house model that we build ourselves.
Yeah, along those lines, I built an in-house model as well, but again, it's very simplistic, based, records versus risk and type of data. But I'm sure, because I built it off an insurance model, but having that calculator would be very helpful.
To echo them, and it's what I tell my clients too. I mean, because you'll end up in situations where you're trying to establish that relationship, and you're working on signing a business associate agreement or a contract, and they have a limit. They say we want you to prove you have X amount in cyber coverage, or some of the vendors you work with would be okay with $1 million. Others it might be 3. Some it might be 5. Others they might need 10. That's where, and this is where I think a lot of organizations run into trouble. finding a broker that has a cyber specialty is really, really important because they aggregate their data. They also are really familiar with the players in the market. I had a law firm client, a law firm tell me at a conference a couple weeks ago, well, nobody will sell us cyber insurance. And I said, well, then you're not talking to the right broker because it's out there. And these companies, the brokers as well as particularly, and I'm going to use your language, a modern cyber insurance company are going to have access to data that will help answer that question.
Okay. Yeah, because we're trying to advise the legal team as they're doing the negotiations, and we had this broker, was it Marsh somebody? Yeah.
I think I've heard of them.
I think I have too. So if that is available, I mean, if
One more thing that I would add, I'm not here to pitch, so if you come find me after this talk, we actually make this tool available for everyone for free, and I'll tell you how to get access to it.
That would be
One of the things that
Thank you.
one of the things that you may want to consider, and I don't know what your negotiating posture is with your vendors, but I would start out requiring everybody to carry $5 million. I'd ask for an outrageous number out front, and even a guy that's got $1 million in revenue who's trying to bust in and get some business, let them prove to you why they don't need to provide you $5 million. It could be because they've got good security in place. You could negotiate some controls. It could be that they're a $1 million company and nobody wants to write a policy that's the biggest asset in their balance sheet, right? But in terms of negotiating philosophy, I've seen that work before, and I'm sometimes on the other end of that when I got somebody who's in a startup and they want $10 million worth of insurance, and we go through that process with them.
Okay. Well, thank you so much. I would definitely continue.
Yes.
Hi. Circling back to a point that Lindsay made earlier about sometimes it is the wrong person answering questions, and that's why they might be less than 100% accurate. Do you have any recommendations for how to get the right person to answer those questions? Understanding sometimes companies have some reason why it absolutely has to be the general counsel, the CFO, CRO, who ultimately signs off on that questionnaire, but a lot of the guts of that is not their domain. And a lot of times I can tell who answered the questions based on the language they use. Yeah. So how can I encourage my customers to get the best person answering questions?
I'd tell them that if they don't answer them right, they're not going to get their claim paid. I mean, I don't know how else to put it. There's a big, there's big caps on the application that says, you're warranting these answers.
Encouraging collaboration, which can be really, really difficult because a lot of organizations are really siloed. And I 100% get that there's either going to, sometimes it's the GC that's going to sign off on that, or a risk manager, or an insurance procurement person, whatever that title is. And sometimes you actually end up in situations where the person who's going to sign off on it doesn't take the time to educate themselves so that they don't feel confident signing off on something that they don't fully understand. However, it's really important to make the point, and I'm not throwing anyone under the bus, it's just kind of shifting and changing. The older that cyber insurance gets as a product, the more likely the answers to those questions are going to be scrutinized. Mm-hmm. And so it's really important, I think, probably to even tie it to other type of incident preparedness. When you're doing an incident response plan and you're figuring out who your incident response team is, those team members are probably the same people that need to be looking at the questions on the questionnaire, because it's all of their departments that are impacted by an incident, so it's all of their departments that need to be working on the prevention, and the questionnaire is aimed at prevention of incidents and risk management. It's not going to be a one-for-one in that situation, but it can be an exercise that goes alongside with incident response planning and tabletops, the procurement process, and opening those lines of communication.
It also depends on your company size. If you're a 10 million revenue company, you're probably not even going to answer all the questions. You may answer 5 of them that you know and just leave the rest blank. On the other hand, if you're a $500 billion company, the questionnaire is probably not sufficient at all. Then they're going to have to talk to your IT staff and all that. There's a sweet spot in the middle, maybe 500 million to 5 billion or something, where the questions really matter a lot. And as you were saying, the risk manager is usually the one who organizes it. Hopefully that person knows they need to go to this IT person or the CISO to get the right answers to answer these questions.
Yes, sir.
As somebody who's actually had to fill in those questions, they seem a little technologically presumptive. think questions about my Active Directory when I don't have one, questions about my physical data centers when I don't have one. A not applicable option would be nice in those questionnaires if we could have one. My question was really for Lindsay. When it comes to paying out ransoms, speaking about the ethical nature of this, what are the considerations about whether or not you've just given Kim Jong-un his next missile?
Well, okay, so I'll say this, because this is do people ever pay ransoms is the cocktail party question I get. And, you know, we've already talked about it today. Yes, companies do pay ransoms. Nobody wakes up in the morning and says, you know what, it would be a great idea to pay a ransom today. I think that's what I want to do. We always approach it from the perspective of that's our last-ditch effort. But what I explain to my clients is it is not my job to catch the bad guy. It is not my job to decide whether this is the right or wrong thing to do. It is my job to facilitate the recovery for this company. And if it is what we have to do to keep jobs, to keep the company afloat, we're going to figure out how to do it. Now, that said, there are sometimes circumstances where the process that we go through with the forensic investigation and with our cryptocurrency brokers, we're checking to make sure we're not paying sanctioned entities. I have had one situation, and not to get into the moral considerations of whether you pay for data suppression. Insurance companies don't like to do that, and I tell my clients not to do it. I did have one situation where we did pay a ransom for data suppression because the stolen data included the schematics for a weapon. That has actually come up in my practice. And while it was already stolen and it was sitting on a server somewhere, our concern was we don't want this published on the dark web. Because if it's published on the dark web, now it is available to people that we don't want to have it. So we at least kept it confined to this bad guy, who we called by a specific name, and I can't remember what it was now. Probably something NS, not safe for work. So it's a collaboration and a cost-benefit analysis when we go through it, and sometimes that is. Sometimes it's we have to pay this because what's in this data doesn't need to be publicly available. Other times it's about you never woke up that morning and said you wanted to pay a ransom, but it's the right thing to do for my employees, for my stockholders, and for the business that I run, and I'm not going to watch it go up in flames. And that's what my job is how do I keep you from going up in flames, and what are all the considerations around it?
We got 3 minutes left. Last question goes to you.
Okay. So my question is related to being able to prove your security posture or controls are in place. And the example that Scott, you gave earlier was having CVEs of this level, level 9, done within this period of time, and medium level done within this. As a former CISO, one of the challenges I often have is a 9 isn't always a 9. And so it really depends on the context for which it's deployed. And a lot of assessments done to determine, is it exploitable, where does it sit? So if someone is trying to answer those questions, which I also was a person that had to answer those questions, it's often well, it kind of depends. It's like, can I give you my software development lifecycle and vulnerability management policy? Because in some cases, a medium becomes more of a 9.5, and sometimes a 9 is really an 8. Do those types of conversations enter into those discussions for a cyber insurance policy? Because it's kind of, you're getting quite granular, but it's because it actually kind of depends.
It's such a great question. I'll say a couple of things. One, if you're filling out a form that's asking if you're patching every CV that's above 9.0, go talk to your broker and ask for a different form, because you're not going the right path for the right carrier. That's one thing. The second would say, we see the same thing. For us, we developed a machine learning model that looks at every vulnerability that comes out and gives them a score. And the score is actually gives them 2 scores. One, what is the probability of exploit code existing for this vulnerability? And 2, what is the probability we're going to see this vulnerability being exploited at large scale? If those 2 things go high, those are the types of things we're going to ask you to patch. But we will specifically tell you, we're not going to ask you in the questionnaire, do you patch every CVSS above 0.9 quickly. No, we're not going to ask you that. We're going to give you a report that tells you, hey, we found these things in a production environment. What we believe our machine learning models are telling us is a production environment, and here's why we think you should patch them. And of course, you're more than welcome to come back and say, hey, I'm actually, instead of patching, I'm going to put this behind our zero trust solution. I don't have time to patch for this right now. And we're going to take it. It's absolutely fine. But I will also tell you that not every carrier in the market is even prepared to understand what the hell you're talking about. So
There's that.
We only have a couple seconds left, but to your question, we do ask about CVSS in our questionnaire. It's because some of the carriers want it, maybe not the modern ones, but some of the more old-fashioned carriers do care about how often you patch CVSS 7.0 to 8.9 and 9.0 and above. And we actually have found statistically significant, pretty strong signals, even in just a yes-no answer. I know a yes-no answer doesn't meet a CISO's, like, it makes them flip out, basically. Like a CISO's like, I don't want to answer this yes or no. But we do get yes or no answers, and it is very correlated to whether you'll have a cyber insurance claim. We've done a public report. You can Google Marsh Cyber Controls Report, or I can share a QR code with you later. But we have found that question in particular, 7.0 to 8.9, within 7 days, is extremely correlated with whether you'll suffer a cyber insurance loss in the next year. If you say yes to that, you have a much lower chance than if you say no.
The problem,
and not just saying yes, you actually have to do something. You can't just check the yes box and lower your risk.
The problem isn't the correlation to loss. It's the pain that it causes to the CISOs. Because as she was mentioning, like not every 9.0 is going to be a critical. Actually, you have 2,500 new vulnerabilities coming out every month, 5% are actually exploited by attackers. So it's actually our job to do better and focus on those things. So honestly, the answer to your question is we need to be doing better.
So with that, we are out of time. Please, a round of applause for our panelists here. And thank you all for being here. This concludes the Cyber Insurance Summit. Have a great night. Have a great Black Hat. See you next year.